Most traders think they understand the weekly candle, but they only know reversals. That's why they miss the best continuation trades. Today, I'll show you exactly how you can trade the weekly candle continuations using the same weekly candle framework. In the last two videos, we focused on the weekly candle reversals, same candle, same levels. But here's the truth. Sometimes price isn't trapping traders. It's just continuing. This is where most traders lose money. They fade strength. They short into momentum. They try to force reversals that simply aren't there. Continuations are where consistency comes from if you know what to look for. Here's how I define a weekly continuation. First, we mark last week's high and low. That never changes. I use SMC X because it marks the weekly range, sweeps, and Cisd levels automatically. Link is below. Now, instead of a hard rejection, you're looking for clean displacement breaks, price holding above the weekly highs or below the weekly lows. This is where support becomes resistance or resistance becomes support. That tells you the market makers are holding positions, not flipping. Entries are still on the lower time frame, 5 minute, 15 or 1 hour. I'm not chasing price. I'm waiting for continuation structure. Here are the entry triggers I'm looking for. Either opposing candle break entry, displacement then pullback into a fair value gap entry, a trend line break entry, or a sweep and Cisd entry. It can vary depending on how price is reacting at those levels. Let me show you examples on the chart. Here I'm at the charts. I'm going to show you two examples, one with Bitcoin and one with gold. This strategy, however, can work on every asset class. Here I am at the weekly chart, and I've marked out the candle highs and the candle lows. This is the end of the current week, and we're just about to start the new week. Once you've marked out the highs and lows of the candle, you can drop down to a lower time frame. I like to go to either a 4 hour or a 1 hour. Here we are on the 1 hour chart, and this is the weekly high and this is the weekly low. This is the first candle of the new week, and the market has just started the new week. So now we want to observe, how does price react at these levels? Either two things are going to happen. Price is going to come to the low and find rejection, or price is going to come to the high and find rejection, or price is going to break through and find continuation to the downside, or price is going to break through the top and find continuation to the upside. So right now there's 4 possibilities that can occur, but we don't know what's going to happen. We have to pay close attention and observe how price reacts at these levels. Price is moving closer and closer to the lower, and then we get a break through the level. But a break through the level is not enough confirmation for us. It's just giving us more confirmation of what to look for next. So this in essence could be a fake out. A lot of people could have potentially entered on this candle closure. But what we want to look for when we see a break of structure, you can see this is our weekly low. Now price has actually broken the previous weekly low. So what I like to do is then I like to mark that low as my confirmation level. So now if price is able to break this low, then for me it's a confirmation because it's broken a weekly low, and then breaks the low that was created when price broke that weekly low. So this becomes the key level that I'm looking to create entries. So let's observe. There you go, price just broke that level. So now you can see we got one break of the weekly low and another strong break of the weekly low, and breaking this opposing level. And we're getting a break of structure. So this is showing us multiple breaks of structures that are taking place. When we get this break of structure to the downside, you can also notice we've got nice displacement happening on this bearish candle. So how we enter this trade, we enter our short position on the break and closure of that candle. Stop loss goes above the swing highs, this area over here. And then looking for targets, we move over to the left and we grab the lowest low as our liquidity area. That becomes one target. If we go further to the left, here we go. This is a nice low over here. This becomes a second target. In this current trade, these are 2 main targets because these are liquidity lows. Every setup you get into is going to be different depending on the market conditions of the previous price action. So you can see over here, this is our current setup. It's a one-to-one risk to reward. Sometimes it's going to be better than others, just depending on the setup that you're being presented with. Also keep in mind, when we get break of structures to the downside, oftentimes price likes to come back to retest that level and then continue more to the downside. So we have another potential entry when price retraces to this level. But let us focus on this current trade. So you can see here, price has broken that level, and then price drops all the way down and takes our profit. So that would have been a nice clean trade. Super simple, guys. You can see this is a very simple strategy. If we wanted to focus on the next entry, there is a possibility that price is going to either come back to this fair value gap to retest this area, or to this opposing level where price broke. So this becomes the next area to look for an entry. So let us move away this liquidity. This has been done. Okay, price looks quite strong. You can see a nice displacement to the upside. And there you go, price is tapped into our key level. So this is a key level now. Structure has been broken. It's retesting this level. So now typically at these levels, we want to see a sweep occur. This is basically now the reversal strategy that I taught in the previous 2 videos. So you can see over here, price is tapped into this level and dropped. So our confirmation is going to be when price can break below that level. See, price goes up. There we go. So we get the sweep. So this is where the sweep occurred. You can see price has caused the sweep. Now this level at the bottom is our CISD level. This is our CISD, this is the sweep that was completed, and this is our reversal strategy. We get the sweep, we get the CISD. So we want to see a break of the CISD for our entry. So there we go. There you go. Price breaks that level nicely. You want to see a nice candle break so we can enter our trade on the break. Stop loss can go above the highs or these highs over here. It just depends on your tolerance for risk. So let's say I move the stop loss up here because I know after experience, if you get a true manipulation and a sweep and you place a stop loss above there, price does not like to come back past that level. So now we're looking for potential take profit area. And I always like to use the previous lows. So you can see here's a liquidity low and here's a liquidity low. So these are going to be potential areas where we're going to look to target. And it's a nice 173 R&R. Let's play this out. There you go. Target hit. Also notice when we got a break of the structure at the CISD, price came back up to retest the CISD. This can often happen. You can also notice this is also a fair value gap. So price came back up, retested the fair value gap and also the CISD level before breaking more structure and breaking more structure, eventually hitting our target. Here we are on the next example, and this is gold. As you can see, I'm on the weekly chart. I've marked out the highs and lows of the previous week, and now we're entering into the new week. Once I've got that set up, I like to go into the 1 hour time frame. So here I am on the 1 hour time frame, and it's the start of the new week right now. So as I explained before, either price is going to find rejection at the top, or it's going to find rejection reversal at the bottom, or it's going to break through the top, continuation to the upside, or it's going to break through the bottom and continuation to the downside. Those are going to be the 4 different trade angles we can look for. So let us observe what price is going to do. So as you can see now, price has broken through the high of the previous week. It's broken through and it's showing a lot of strength. So what we can do now is we want to see these highs being broken. So whenever price breaks a previous week high, we want to mark out the high that was created. So let us move a little bit on. You can see prices drop back into the range. This is why we need this confirmation. We need to see price break that high now to confirm this is in fact real. You can also notice one thing that's happening here. You can notice we're getting these lower highs. We're getting a succession of lower high, lower high, lower high, and it forms this pattern. This is a very bullish pattern to be formed. You can see price forms a base and then we get a lower high, lower high, lower high, and eventually price will take off to the upside. So you'll notice whenever price breaks a high or low, it will form some kind of a pattern, or you'll notice something happening. Either way, we mark out the highs, there's opposing levels. You can also see because we had these lower highs, it was a stronger confirmation that price was going to go to the upside, and there you go, price just broke that level. So now what we want to do is we can enter on the candle closure. Stop loss can go under these lows or under the main lows if you want to be super safe. And then looking for targets, we're going to target the highs of the range. You can see over here we got 2 swing high points. Either one of these are liquidity areas, so you can target the first or the second, and these become high probability target regions. So let's play this out. Price is finding consolidation, then we get another break up to the upside, and we go target 1 hit, target 2 hit. There we go, both taken out. The key concept you want to understand is continuation entries. If price breaks the high, you want to see some kind of support being developed. And then we mark out the highs of that region. And we want to see price break these highs to get confirmation of continuation. And for the downside, if price breaks the weekly low, we want to see some kind of structure being created at the bottom. And then the break of that structure is going to confirm for us. You can see over here. Once that opposing structure gets broken, that is a confirmation to the downside. Once this opposing structure gets broken, that is confirmation to the upside. So this is what you want to see happening when price breaks the weekly high or the weekly low to give you the confirmation of these continuation entries. Same weekly candle, same levels, different behavior. If you only know reversals, you'll always fight the market. Continuations are how you stay aligned with the trend. If you're using the weekly candle model, then have a look at the SMC X Indicator below. It automatically marks up all these key levels on your chart. It helps you understand whether price is in reversal or in continuation. Click the link below to find out more. Now in the next video, I'm going to show you exactly how to determine whether price is going into reversal or going into continuation. In essence, it's understanding the daily bias. Click the video now and dive straight into that video.